Welcome to the coffee shop, everybody, and let me bid you a hello from the back of the bistro bar. This video is very casual and yet extremely informative. I rehearsed nothing here, okay? I'm hoping to use this particular video so that you guys can come back into the comments area and specifically ask questions about how this works, because I want to give you this information, but most importantly, I want you to understand it. This video today that I'm doing is called the RSI Formula Explained. You've heard me talk about this formula time and time again in certain places. You've seen it in comments. And what I've told you is that when you get certain activity with your RSI, I can even turn the candles off here. Like, this formula is so nice, you don't even need your candles. If you want to know what this is that I'm using down here, for some of you who have been under a rock, look, it's got buy and sell indicators. It's got 8 different moving averages that you can set. It has Heikin-Ashi candles. It even has 2 types of stochastic indicators all built into it. You can use Bollinger Bands, okay? It'll show you support and resistance levels, when you should be getting out of your long trade, when you should be getting out of your short trade, and all of these inputs that you can use for your stochastic, your other stochastic, your RSI, your moving average. Here you have 8 different types of moving averages. Here you see 7. There is one hidden. It's just always on, okay? And of course, your Heikin-Ashi candles, you can adjust it to whatever you want. Now, let me turn off a few things because I don't need them to be on, right? I don't need the stochastic. I don't need the Heikin-Ashi candles. All I really need is the RSI. I don't even need the moving average. I don't need any of that, right? I developed this strategy without using the moving average. And I should probably kind of, touch it up a little bit by keeping the moving average, but I'm going to do it without this time, right? I'm also going to turn off the buy and sell indicators, okay? Long exit, short exit. I don't need that stuff on right now. This is just going to be simple and easy right here. You know what? I'm going to turn on the Heikin-Ashi candles because I just realized they will help you. Now, so there's something I developed some time ago called the RSI formula, and this is how it's explained. Usually what the RSI formula will do is it will get you into a trade at the right point. It'll tell you what would have been the right point to get into a trade, but it'll tell you how far that trade will go. Literally, how far will it go? And it's just awesome. I love how this thing works. Now, I haven't seen anybody use this. I don't know of anybody else using this online. I've not seen or heard anyone else talking about it. And every time I bring it up, people are like, I have no idea what you're talking about. I've never heard of this thing. It's just got to be a myth, right? So here is an urban legend come true. Now, first, let me describe to you the ratio, okay? If your RSI is in the 50s, you have a 1-to-2 risk reward. If it's in the 60s, it's a 1-to-4. If you're in the 70s, okay, your RSI, if it's registering in the 70s, it's a 1-to-8. And if it's in the 80s, it's a 1-to-10. Literally, you can go 1, okay, to 10. I can't even get there on my screen. You can go 1 to 10. I can't get there. You can take a trade like that long, all right? And there's a way to do it, which I think I'll have to show you how to trail your take profit. You've heard about people trailing their stop loss. This is a way for you to trail your take profit. And I think I'll have to do that in a separate video because it's a little complicated to describe, and I have to find certain places in the market for you to be able to do that. Now, what I want to talk about here is the RSI formula, how you enter at the beginning of that candle and just set your trade where you should get out. Now, RSI formula works like this. Now, I know how this works, like going bullish, just like going, where's my stuff here? I know how it works going bullish, okay? I don't know it off the top of my head when it goes bearish. So I'll have to use a calculator and, I'll have to do some numbers in front of you, which is great because then you'll see how do I get to certain, how do I get certain numbers? How do I get this formula to work? Now, let me describe something to you. I'm looking at my oscillator and I'm looking at price. I can see that you were ranging here and you were stuck to the 200 period moving average, and then finally something happened crossing the 50. Now, I would end up seeing that because let's say I finally came home, it's 8 o'clock in the morning, and I open up my chart and it's here, okay? All of this already happened. All of this hasn't happened yet. I want to know, is this a move, like this part, is this a move, and how far will it go? Everybody wants to know that. If you missed the entry of a move, you want to know, is there still enough movement for you to get in and catch it to the end, right? So you can see that here, price is in a downtrend, okay? But you would have only seen it up to this point, so you're not sure. All you saw was this little dip come down, came back up and tested, and it's moved only this far. To anyone else, that would be like, it's probably oversold. I'm not going to get in. You couldn't be more wrong. Here you go. Let me describe to you what happens to the market. For price to be moving downwards, first it needs a huge push. It needs a bunch of volume to move it in a direction away from a previous direction. You can see that market was moving up here, right? It's just a little bit, but it moved up, and there may still be some upward momentum. So there needs to be a huge push to the downside, and you need to know, is that push greater than the current movement to the upside, right? Simple enough. Okay. So anytime that happens, and you heard this over and over again, you hear about a test off the 50. Okay, great. The RSI formula works like this. When your RSI crosses the 50 level, okay, it's 50 level, which is this midline here. When the RSI crosses the 50 level, you need to look at the Heikin Ashi candles. If the candle closes majority below that 50 level, like here's the midline, you can see the majority of that candle is below that 50. Okay, so that's a good amount of volume right there, okay? So you don't even need to open up like a volume indicator to see this. Now, so you know you've got good volume. It broke off the 200. It clearly passed through the 50. But again, you are seeing the market here because you walked up, it's 8 o'clock in the morning, and you opened your chart, right? Great. At this point where the RSI crossed the 50, what is the value? The value is 47.10, right? Like I said, I know these numbers going bullish off the top of my head. Going bearish, I have to do the calculation by hand, okay? So you can get in here. You should get in when it tests off the 50. I'm going to show you both. I'm going to show you the entry from here, okay? And I'm going to show you the entry from here, testing off of the 50. See how price came down. Now what's happening is, like I said, you need a bunch of volume. First candle with volume, second candle with volume, third candle with volume. There's enough volume here, including in the test candle, to move the market in a direction. But somebody stepped on the gas over here to push things down, and it slowly gets released downward through these candles until it runs out of gas, it runs out of momentum, and then it starts moving back the other way. That's what happens with pushes and breaks of trends. Something has to happen. There's all this volume pushing to the downside, and then that volume pushes the market down, slowly releasing more and more volume as it goes down until it's released enough and it moves back up, okay? I think I described that enough. So here's somebody stepping on the gas. Here's the momentum of the car until they need to step on the gas again, which doesn't take place until here. Okay, now your RSI crosses the 50 here. It is 47.10. That's what it registers. Okay, let me just do some math real quick. 50 minus 47.10. That is 2.9. All right, so we're going to say 52.9, right? 52.9. Now, you are going to lose the first number. You are going to lose the last number. The last number always comes off and it disappears. The first number turns into your ratio. Your ratio, you're in the 50s. You're in the 50s. Your ratio is 1 to 2, okay? 1 to 2 point what? This is why I don't like people on YouTube telling you go 1 to 1.5, 1 to 2, 1 to 2. Where do you get this number from? I want proof. I'm going to prove to you that they are giving you false information and they are rehearsing this strategy that they show you ahead of time. And they pick a place where 1 to 2 works. I'm going to show you exactly how far you should get. Okay, sorry about that little rant, but I don't like people just giving you blind numbers with no real information. Okay, now you have lost your 5 because the 5 is telling you you are 1 to 2. You're using the 0, it just disappears. So now you've got 2.9, right? You just moved the decimal point over. That's it. So forget that last number. 5 is a 1 to 2. 2.9 now becomes 0.29. You move the decimal point over. So you have a 1 to 2.29. Got me? Move the decimal point over. 1 to 2.29. So let's see where that goes, all right? I'm doing this with you live first time. Here we go. So you would have entered here because your RSI has crossed the 50. Well, you would assume the entry would be there because, again, it's 8 o'clock and you're looking at the market here. You want to know how much further is it going to go. So you can actually set a false trade, right? Just set a false trade as if you entered here, but you're looking at it here. Enter your trade. Go for your swing high, which is way over there, right? Set it just on the top of the wick of the candle, okay? That's your swing high. And I said you were going 1 to 2.29. Look here, 0.29. 1 to 2.29. I'm looking for 2.29. That is 2.29. It is here, 2.29. Where does that get you? All the way out here. And if you look very carefully where that brings you right to where? Where does this get you? Right to the tip of that candle. It gets you right. So this is the candle where the trend changes, essentially. You know what this is. This is a morning star candle or a dragonfly or whatever you want to call it. This candle has many different names, but it gets to the end of that wick. And what happens at that point? Look at your RSI. Your RSI is now officially in an uptrend. It is your first Heikin-Ashi candle with no wick. Okay? This RSI formula works every single time. You actually got out of your trade right here. How would you possibly know here, okay, at September 24th at 4 p.m., how would you know that down here, a day and a half later, 24th to the 27th, so 3 days later, how would you know that 3 days later the market is going to hit a pivot right where you're going to get out of your trade? How would you know? You wouldn't know. But the RSI formula is telling you that that's what's happening. This amount of volume, and you saw it here. You looked back at the volume and the break in trend, and you calculated that the price would move down to this level. And it did. Every single time. Now, like I said, you could get in here where it crosses, but you should, this is what you do. You should analyze your price, analyze the RSI when it tests off the 50. And doing that is really good because you actually get in at a better price most of the time, okay? So what you can do is, let's say you entered your trade here, right? Give me a second. Let me grab one of these. Price note. I like these. So let's say you entered into the market here. You knew that it was going to be moving down, but you want to wait to analyze the market. So 1, 2, 3, 4, 5, 6 hours later, it actually tests off the 50 and you can enter in at this price, right? So let me grab another price note. You enter in here, right? What happened? Instead of entering at 0.71, you entered at 0.715, which is a slightly better price. It's slightly higher. And so instead of entering low, you entered high and went to a short, okay? That's the point of getting in off the test. Now let's see what the test tells you to get out at on the market. So you enter here, okay? You actually bought shares. You bought them here. There we go. The RSI here is 48.8, right? Okay. 48.8. 50 minus 48.8 equals 1.2. So that is equal to 51.20, right? Now, again, you are in the 50s, and it comes out to what? 1 to 2.12, because you just moved the decimal point over. This comes out to 1 to 2.12. It doesn't matter like what you have going on here. If it's a 50, the 5 disappears and it becomes a 1 to 2, right? Let me just put that back. I can't. 51.20. So the 50 disappears and it becomes 1.20. 1.20. The 0 disappears because you're not going to use that 1.2. The decimal point moves over. 1 to 2.12. Let me do this so you can see it. So it becomes a 1 to 2.12. Sounds like a tongue twister, right? So I set my swing high. Oh, did I? No, I didn't. There we go. I set my swing high because I'm looking way over here. I entered at the close of this candle, and I'm looking for a 1 to 2.12. 2.12. 1, because this part is 1, right? This is your 1, and you need to make this 2.12. 2.12 here. Come on, slowly, slowly. There we go. Right there. Where does that get you out of the market? Right there. This can't come up any more perfect, can it? I mean, how much closer do you need to get? It gets you out right at that candle. Right before a pair of engulfing candles ends up eating up the market and going back the other way. It wouldn't have hit your stop loss, but still, you wouldn't have to wait for this range. So the RSI formula, you looked at it here, you looked back here at this movement, and you saw it at this point, right? And you were like, oh, I can still get into the market because it's going to go down this far. And you get in, let's say you got in here, and you just take profit for this level, and you walk away. Don't have to stare at it, right? Let me try another one going the other way because I want you to see something. 50 is a 1 to 2, right? But it becomes a 1 to 1 if you are going against the trend. So let me find one right here going against the trend, right? Large candle crossing over the 50. This one crosses nicely over the 50 because it starts at, where does this open? The open of this candle is a 57.40. No, wait, open, high, low, close. Yeah. Oh, no, I don't have it set up right now. I don't have it. Yeah, I don't have it set up right now. I have to have a few other things turned on. Oh, here it is. So the open of this candle is 50.3. Okay. This is not a candle where I should be doing this. No, I wouldn't do this here. I want a candle to be opening below the 50 and closing above it. So this might be good. Let's see if I find another one. Yeah, there's really no good trades here. So let me try and find one that goes against the trend so that you can see a good representation. This one. The reason I'm picking this one is because the Heiken Ashi candle opens below the 50 and it closes above the 50. Also, the RSI is 40 something and then it's 50 something. So let's try it out here. Like I said, the RSI formula for 50, I don't want to go back there now. The RSI formula for 50 is a 1 to 2, right? So we are on this candle now. Let me take this, put it here so you can see where we are. I am on this candle right there. Now, so the RSI here is 50.65, right? I know off the top of my head what that comes out to, but I want to convert it for you. 50.65. That is a 1 to 2.65. 1 to 2.65. Sorry, 1 to 2.06, okay? You lose the 5, right? So that becomes 50. You lose the 5, 50.6. Move the decimal point over. 1 to 2.06, okay? 1 to 2.06. So you enter at the close of this candle. You look for your swing low. Your swing low is literally the last place that the RSI dipped down. You don't want to go for the super swing low, okay? Now, what this is telling me is that this is also not a good place to do this trade, because even though the Heikin Ashi crosses the RSI and the 50 here, it did not cross the 50 here. This is why you do not do it counter trend. You want to be able to cross the 50 here. You need to be above the 50 here. And you have to cross your 50 period EMA here. So my actual entry is this candle, the close of that candle. My swing low is here, okay? Now the RSI is 51.71. 51.71. 51.71. That is a 1 to 2.17. But since I'm going against the trend, it is a 1 to 1.17, okay? 1 to 2.17. Lose the number. I'm going against the trend, so it's a 1 to 1.17. So here we have 1 to 1.13. I'm going to 1 to 1.7, and that's all I am doing. That's it. I know it's a small move. It doesn't matter. That's as far as you should go with it if you feel like doing it counter trend. And that's as far as you go. Now, this is probably right where a range ends up starting. And yes, there's a range candle right here. This is the initial part of the range. So this would be your high and low. What you actually did was you ended up getting into an exit short position here. You hit support right here, okay? And there's really nothing else but moving averages in your way to stop the momentum of this trend. So that's what happens. That's why this is such a small move. But either way, you end up getting out where? At the last long wick before the range. Look at that. This is the super long wick that takes out liquidity and starts pushing people back down and gets them trapped in a range. But you were able to get out, because some people would see this break of the 50 and they would be like, hey, yeah, I'm going to go 1 to 2. Okay, let's go to 1 to 2. 1 to 2 is way up here. You would make it, right? You'd get it, but you'd wait a long time to get there, right? And they'd probably hit their swing low. They'd probably set their stop loss like way down here somewhere. Either way, I don't want to assume what they would do, but it's just kind of silly to have this as your risk reward. This looks ridiculous. Okay, your risk reward is 2 times the size. Your risk is 2 times the size of your reward. Now, again, let me just phrase that again for you. Okay, let me just tell you that the RSI formula in the 50s is a 1 to 2 when you're going with the trend. It's a 1 to 1 if you're going against the trend. Now, these other numbers, the 60, 70, 80, I'm going to have to put that up in a different video because this one is going to get too long for you guys to even want to rehearse this. Okay, so go back, test it out, test it out, test it out. And just to let you know, my RSI is just an EMA right now. That's all. I'm sorry, my RSI is just an RSI. Nothing special about it, okay? There's no special calculation. I'm using a 14 period RSI. You can use whatever you want, 14, 18, 12, 21, whatever you like, okay? When the RSI crosses the 50 level and the Heikin Ashi candle by majority crosses that 50 level along with it, okay? Here is a move upwards right here. This is the upward move. You can see that this candle closes majority above the 50. It crosses over the RSI from below, and it closes above the 50. This would have been an entry, right? That would be an entry right there. You go for your immediate swing low. What is the RSI here? 51.44. That is a 1 to 2.14. But in this case, I'm going against the trend. 1 to 1.14. 1 to 1.14. I'm just doing this with you live right now, okay? I don't know about this candle. And look where it takes me. It takes me right to the end of that engulfing candle, and then price starts moving down. This works every single time. The RSI Formula Explained. I hope you get it. If you don't get it, leave some questions in the comments below. Please ask the questions. I want you to understand this, okay? Later, people.